geo. But let's go back to markets. Shashank Khade now joins in to talk about the current market scenario. Shashank, hi, good morning. What's your sense? How much of a post-poll scenario has already been factored in by the market? And on 16th, is there room for upside or downside for the market from this level?
Okay, see, my sense is that, firstly, I think the stakes for Indian investors at large are far lower as compared to 2004 and 2009. Purely because the asset allocation amongst Indian investors is far lower than what it was in 2004 and 2009. Let's go back to 2004, where the most unpredictable outcome came in, and you actually saw the Indian investors who had participated substantially towards the end of the first year of the bull market. They really getting caught unawares, and we have had a 25% sort of a fall at that time. In 2009, though fresh investments did not happen, thanks to the legacy of the bull market, a lot of Indian investors had legacy of huge equity allocations. So there again, the stakes were quite high. But this time around, if one really sees the market, prior to this event, we've actually seen investors getting leaner by the day. And frankly speaking, the fresh allocations to equity has not been as high. So if you ask me, from the standpoint of stakes, I think the stakes in the event that the event goes either way are far lower. Secondly, I think the Indian investors have been actually fixated towards politics and the outcome of that rather than economics, while the foreign investors seem to be clearly focused on how Indian economy will chug along from here. So clearly they are taking a 2-year view from here that GDP has bottomed out and will accelerate, while the Indian investors have been on a wait and watch mode, waiting for the event. Coming back to the very near terms of sort of an outcome on the elections, I think this time around we have a staggered manner of discounting the outcome. Of course, this event has been there event risk has been around for a long time amongst the investors' minds. And come 12th and 13th, I think we'll have one round of discounting, and thereafter 16th partially we'll have another, and 7th, maybe on Monday we'll have the final round. But my sense is that, given the fact that there will be large traders who will be positioned on either way of the trades, and there'll be, very few sort of investors who would really play for the short term, having seen 2004 and 2009, my sense is that the event could be short-lived in terms of volatility. And it could be maybe a, couple of days sort of a, affair in terms of going either way, either a deep cut in case if, an NDA does not get 230 plus, or you're looking at clearly the market giving a thumbs up if things starting chugging along. And clearly I think the question which investors are yet to ask is what should I invest in equities? They're still asking a question, why should I invest in equities? This graduating slowly to when should I invest in equities, and now finally is the time when people may ask after the elections, what should I invest in equities? So I think we are going a long way in this process. And if you look at maybe 8 or 9 months back, where we were in July, where we were discounting the fact that QE will taper and will bring uncertainty in the Indian markets. Today we are sitting on at least 40-45% cut in QE, and we are sitting pretty at much higher levels. So my sense is that markets are uncanny in their ability to surprise investors. But from an economic standpoint, looks like we've discounted a lot of political risk earlier in the last 5 to 6 years. We have also seen, worst of times in terms of earnings momentum for a lot of companies. So clearly from that standpoint, I think the direction should be upwards in the medium term. In the month of May, I think it's going to be very difficult to call where the market finally will be headed and where will it settle down. But it's very clear that the foreign investors also have been sitting on the sidelines waiting to invest once this event gets over. So I think once the event gets over, either way, clearly there is going to be money, getting into equities again.
Okay. Shashank, hi, good to see you in this morning. How would you position yourself on the banking space?
So clearly, I think the trade is, and I think the most cliched one in the last couple of months is, cyclicals. And from that standpoint, clearly banking is the best sort of a cyclical play which one could look at. If the hypothesis of investing in equities over the next 2 months, next 2 years, is that the GDP, Indian GDP will bottom out and will accelerate towards maybe 6% in the next 2 years, then clearly the earnings, for banks are going to accelerate from here. And we've seen the worst in terms of asset quality for the last maybe 8 quarters, a huge amount of provisioning being done by banks. So I think we've seen the worst in terms of on the balance sheet strains in banks. And going forward, if one were to look at in the last 6 months, what the present government did was to go ahead with approvals for a lot of the projects which were stalled for a long time. If these projects get kick-started in this financial year, there are going to be lending opportunities substantially for banks. So from the P&L point of view, I think the banks look far better. Of course, we are at the stage of Bank Nifty almost nudging the lifetime high, and this is the third time which it has done. December 7, maybe November 10, and now that's the third.
From the issue price, let's go back to our market expert, Shashank. Sorry, we had to keep you waiting. Just wanted some view on the one sector which has been completely re-rated, or at least re-rated a bit over last few days ahead of election outcome. Oil and gas, especially stocks like BPCL and ONGC. Do you think these stocks are fairly priced now, or can these stocks rally further from here on?
No, actually, one is of course the oil, PSUs, and the second, is that it's a subset of the PSU companies at large. Now, in the last 4 to 5 years, we've actually seen the government companies underperforming substantially because of issues of, corporate governance, weak corporate governance tag, which investors have been associating because of the negative perception of the government itself. My sense is that a lot of reform has happened in the last 2 years, specifically from the point of view that the diesel and petrol prices have been slowly and steadily inching up towards market prices. If we have a firm and a stable government which can finally take a call on how to address these subsidies, clearly I think the oil marketing companies, as well as companies like Oil India and ONGC, finally have take care of what sort of subsidies do they have to really bear. Because I think the most important issue is that the P&L for most of these companies are very difficult to predict, given the fact that towards the end of the financial year, do you really get to know how much is the government going to share, and finally how much is the burden which each constituent of the oil PSUs expected to bear. So it's very difficult to compute earnings, and it's actually a myth to say that this is how the company should be valued. But my sense is that progressively, I think we are now moving towards a case where the government is now moving towards minimizing the subsidies. And I think that's a very important irritant which goes away, and finally you can value these companies well. So my sense is that if this progress, the progressive path which has happened in the last 2 years continues further, I think the oil marketing companies will finally become meaningful investment bets. Everyone knows that these are companies with huge resources, attractively valued resources, but not paid attention to, clearly because you can't predict earnings with certainty. So I think we are going there in the next 1 or 2 years. Maybe things will fall in place properly, and I think there is a long way to go for these companies, because these are hugely resourceful companies. Of course, BPCL has been re-rated substantially in the last 6 months, purely because of the oil assets which it has outside India, rather than just being an oil marketing company. But clearly, I think these are bets which can yet get re-rated from here.
How would you approach L&T?
See, my sense is that if infrastructure was to pick up and projects are to get implemented, a stock like L&T clearly is going to benefit out of any traction in the capex cycle. So if the capex cycle comes alive, if the infrastructure projects start getting implemented, clearly L&T is the natural beneficiary for this particular trend. And clearly, investors take a longer-term sort of a stand and not look at the present earnings, because the order book traction actually increases substantially. In the last 2 years, what I think L&T has done well was to focus on the international strategy, look at de-risking away from India. So that traction continues, and on top of that, you will possibly see better acceleration in the order intake if the capex cycle comes alive. So clearly, L&T would be a bet on the capex cycle itself, and that could be the best proxy for any acceleration in GDP as well as industrial growth.
All right, Shashank, thanks a lot for that. let's take a break on that note. Up next, more market talk on the other side.